sales growth was a single positive factor. A lot of that due to China's internal economy at 10.8% August, from a year earlier and above the forecast of 10.5%. But the increase did not appear to chime with the corporate report of slowing sales. The yuan's devaluation that was in August, and a purge in the stock market since June have fueled fears of more economic shocks. There needs to be adjustments, and these adjustments come when an economy is overheated, and China's economy had in fact overheated from a realistic point, and you have a lot of usually slack out there anyway in an economy, and one has to look at this real estate, and especially particularly in China, as an irrational exuberance, and the bubble was set to burst, no doubt about that, and it has now and it has come down to where it should be. Credit Suisse, this is from Reuters, plans to sell U.S. Private bank. There, Credit Suisse intends to sell its U.S. private bank and slash its prime brokerage business under a strategy being developed by its new CEO. The results will be presented to the bank's board. The newspaper side insiders saying the bank's U.S. private banking business has around 100 billion Swiss francs. That's $103 billion. The primary brokerage business, which provides service for big clients like hedge funds, fixed income investment business, would be scaled back to free up capital that could be used in other businesses. And Credit Suisse board would need to approve the revamp. The revamp is obviously necessary because of where financial conditions are at the present time. Let me go to some of the latest data. Jeremy Coburn is who we were referring to there. We'll get back to the BBC, but we'll introduce this from Reuters. Weak U.S. consumer sentiment tames inflation, muddies again the rate hike. U.S. consumer sentiment hit its lowest in a year in early September. Producer prices were flat in August. The slump in consumer sentiment, persistently weak inflation reported on Friday. Statement was likely to undermine recent stock market volatility and worries over, of course, China. Very big situation here. Let me just I'll come back to this is a survey of consumers from the University of Michigan. This is in September. The index of consumer sentiment at 85.7. In August, it was 91.9. In September of 2014, it was 84.6, and that's a change of a negative 6.7%. Current economic conditions at 100.3 in September. It was 100.1 in August, and 1 year passed in September 2014. It was 98.9, a change there of negative 4.6%. An index of consumer expectation, when we look at very highly. It's 76.4% in September. It was 83.4 in August of 2005, and 75.4 in September. That's a change of a negative 8.4%. Now, from Dr. Curtin, he's the director. The decline in optimism narrowed in early September from late August as consumers grew somewhat more confident that the underlying strength in the domestic economy would ensure a continual expansion. The two strengths of higher employment and lower price has softened the impact of losses in household wealth. To be sure, consumers will anticipate a weaker domestic economy due to global slowdowns and are less optimistic about future growth in jobs, wages than they were a few months ago. While the current strength in consumer spending is still likely to persist in the year ahead, the more lasting impact of recent events may be heightened attentiveness by consumers to potential negative developments. Without the recent shift in focus, without this recent shift in focus, consumers would have been more likely to view the Fed's interest rate hike as confirming their prevailing optimism. But with the shift, it will be taken as a signal for a slower pace of future economic growth. Now let me go back to the Reuters. The sharp deterioration in consumer confidence and the reemergence of disinflationary thrusts in goods prices will factor prominently in the Fed's deliberation next week and are both likely to add to the case for caution. That is from Marlon Muldren, who's a deputy economist at TD Securities in New York. We went over that at the University of Michigan. But even as households, this is basically what Dr. Curtin said, take a dim view of the economic outlook, there's only a mild decline in sentiment towards motor vehicles and home purchases. We look to the final September survey results for any evidence of significant pass-through from weaker sentiment to actual purchasing activity, but expect a robust income and job growth to outweigh these factors in actual consumption. Data that is from Jesse Horwitz, an economist at Barclays. In a separate report, the Labor Department said the producer index price index was unchanged in August after gaining 0.2% in July. The drag on the producer price from lower crude oil prices and a buoyant dollar was offset by an increase in margins for apparel, footwear, and accessory retailing. Now, this is always a factor coming out, and I'm sort of wondering why we didn't get our update. We usually get an update from a Department of Labor, and we'll quickly go there and grab here's Consumer Price Index. We always like to get the latest, as one would say, and we'll just grab the summary here. This is released on the 19th, and this is the index for July. The Consumer Price Index for all urban consumers increased at 0.1% in July on a seasonally adjusted basis. This is from the Bureau of Labor Statistics. The index rose 0.2% before season adjustment, and the index is for food, energy, and items. All items less food and energy rose slightly in July. The food index rose 0.2% for all 6 major grocery food groups. Indexes included the energy index rose 0.1%. The index for other items, food and energy, also rose 0.1% there. The item index increased 0.2% for 12 months ending there. And then we have some separate breakouts. If we look at July, food at 0.2%, energy at 1%, gasoline at point 0.9%. Energy services a negative 3.4% here. And we're trying to look at this chart as we move along. Commodities less. Wait a minute. New vehicles at a negative 0.2%. We talked about apparel. That's at 0.3%. Medical care commodities 0.1%. Shelter at 0.4%. Not something we wanted to see. Transportation services a negative 0.2%. Medical care services 0.1% in July. All those were for July. The food index rose 0.3% in June, increasing 0.2% in July. Food and home index increased 0.3%, with all six major grocery store food groups rising modestly. The index for dairy and related products posted the largest increase at 0.8%, and ending a series of 6 consecutive declines. The index for non-alcoholic beverages rose 0.4%, and fruits and vegetables rose 0.3% after declining in June. The index for fresh fruits rose 1.1%, while fresh vegetables index declined 0.8%. The index for meat, poultry, fish, and eggs advanced 0.2%, as the beef index declined, but the index for eggs rose 0.3%. Index for cereals and bakery products and other foods at home also rose 0.2%. Food at home index rose 0.9% over the past 12 months. The index for meat, poultry, fish, and eggs has increased 3.1%, with the egg index up 24.9%. A lot of poultry product were destroyed in the Midwest, in particular due to a flu virus outbreak. Millions of birds disappeared, and of course they had to be replaced, and it does take some time to do that. And let's see, food from afar products have declined over the 12-month. Food from away, has unchanged in July. It rose 2.7% over the last 12 months. Energy edged up 0.1% in July after a 1.7% increase in June. Gasoline index increased for the third consecutive month, rising 0.9%. The other major energy component declined. The index for natural gas fell 1.4 after rising in June. Electricity index fell 0.4%. It's a third decline in 5 months. Fuel oil, something we don't talk about much in the summer or fall. Components also declined last 12 months. Fuel oil index has posted the largest decline, falling 29.7%, welcomed in the Northeast. Gasoline index has decreased 22.3%. The index for natural gas fell, that's over the 12-month period, 14.2%. And the index for all items less food and energy increased 0.1% in July. And let's move on down here. And the index, the consumer price index for all urban consumers increased 0.2% over the last 12 months.